All right. What's up, everybody? Hope you guys are doing well. Um, you know, welcome to the Tuesday call. If you like these videos, please like, comment, and subscribe. I have the Discord link in the description. If you'd like to be able to speak to people that are like-minded, just like you, trying to succeed in the markets and in life in general. So go ahead and please hit that link in the description. We'd love to have you in the group. But yeah, so we have our Tuesday call, a little bit more of an informational call, not too much chart oriented, but this is the thing, like, you know preparing these and then presenting these to you guys, not only one helps, I believe, helps the people watching it, but it helps me keep myself in check so that I can perform in a positive manner, so that I can grow as a trader with less setbacks due to myself. So today the topic is good and bad wins, um, and the importance of growing accounts sustainably. So what sparked this idea to do this for a group call was mainly because last week I had a very profitable trade, but it wasn't a good win. I ended up winning the trade, but it was lower probability. It wasn't a trade that I would take again. And I've had multiple trades like that throughout my trading career, many trades like that. And I think as you progress as a trader in general, um, your filter is going to get a lot tighter, and you're going to be filtering out a lot more of your trades as bad trades, and bad wins, even though in the moment maybe back then they might have been looked at as good wins to you. um, so I think that this is a very needed and not enough talked about topic within trading, because many people think that just because you want to trade means it was a good trade. But in reality, there's sustainable ways to be able to, go into the market and have profitable trades that will grow your account sustainably versus playing the break even game or going into the negative. So let's go ahead and get into it. So these are kind of like the areas that we're going to be covering today. Like the characteristics, what makes a good trade and what makes a bad trade, or a good win or a bad win. Um, just to preface, I think that trading in general, it can be a very subjective thing. Everything other than your P&L is subjective. What a good trade is subjective, and what a bad trade is subjective. Or a good win versus a bad win. I think that it's going to vary from person to person and from trader to trader, but it's on you to determine what that is and stick to that so that you don't have somewhat of a moving goalpost to go off of, which will reduce your chances of being successful over the long term. After that, we'll go over a few examples of good wins, and then a few examples of bad wins. These are like personal examples, so you guys can. I'll be critiquing myself on like the good and bad wins that I've taken or that I've had, and then the goal at the end of this is to see different ways that we can increase good wins and reduce or decrease the bad wins. And then after that, I'll just leave it open to Q&A if anybody's watching. So, or if anybody is on the call and has questions. So let's go ahead and get into it. First up, characteristics of good wins and bad wins. So good wins, I think the first and most important thing having to do with good wins is system alignment. I think that having a system in trading or in anything that you do involving probability is extremely important if you want to have a sustainable and long-term success in it. So in the case of trading, this concerns having a predefined system or plan of entering the market on that specific day or in the market in general. So what I mean by that is some people, they have a trading system like myself where we have a way of looking at the market every single day. We have a way of looking at the market, or how we're looking to enter the market every single day, based on a few different types of setups. And those systems keep us in check so that we don't go, oh, sort of in a freestyle in the market, depending on how we may feel on the day, because our feelings are subjective, but a system, when written down and when documented, is concrete, and is objective. Second, it's based in sound analysis. So when somebody asks you, okay, yeah, that was a great trade and you want it, how did you get there? What was your analysis? What was your reasoning for getting in the market? Good trades, they resulted in sound, technical and fundamental analysis. Whether that's making sure that there's no high impact news while you're in the trade, or right before you enter the trade, or right before you exit the trade. Um, And then the technical analysis kind of connects to the system alignment, where you want to have reasoning for entering where you entered, not just when you entered. So it kind of solidifies your reasoning for entering the market, and then therefore it sends a message to your brain that you can trust the system that you're utilizing when it comes to trading. And then lastly, that I have written down is appropriate risk management. That is something that I think is not spoken about. I think it's spoken about a lot, but not emphasized enough. I think that people speak about risk reward a lot, but people don't really understand the different nuances of risk reward. Whereas if you have, say, a 1 to 3 risk reward, you need to win at least 33% of your trades to be profitable. If you have, let's say, a 1 to 2 risk reward, you need to over 50% win rate to be profitable, and things like that. So proper position sizing and stop loss placements being set keeps your risk lower. It caps your maximum downside, and then it can also help you regarding maximizing your upside depending on how your system is with trading. If you have a fixed risk reward, or you have variable risk reward based on different structure points in the market. Then going on into some characteristics of bad wins. Like I said before, this can all be subjective, but a bad win is most likely to have one of these characteristics, just like how a good win is most likely to have one of those characteristics. System deviation. If you have a system in place, or if you have a way, or if you are going into the day planning to look at the market a certain way, and you deviate from that system or that plan, that can result in you taking or having making erratic decisions, and overall having undisciplined behavior in the market. This can breed, I would say, somewhat unreliable results, therefore reducing your sustainability in your P&L and your overall development as a trader. And then luck-driven wins. When you win and you didn't know why you won, for instance, let's say you buy a stock without knowing anything but the ticker, and you just buy it and it just shoots up, yeah, you won. But you don't know why you won. You don't know the analysis or any rationale behind why you took it. You just took it possibly maybe due to hype, maybe due to FOMO and things like that. So the win resulted entirely from chance and entirely from just flipping the coin and the chance going in your favor or the odds going in your favor. That's when trading turns into gambling, and that's where the bad name can come from for trading sometimes. And then next, poor risk management. I would say extreme leverage. When you're trading extremely heavy size for the account size that you're on, say you have a $1,000 account and you're risking $700, any trades that you win, yes, you're gonna feel great, but if you lose one trade, that's gonna take at least up to anywhere between 50 to 70% of your account away, which will have a negative impact on your mental. No stop loss is probably the worst thing it's probably it's like missing an open layup on a fast break. If you don't have a stop loss, you're just not protecting yourself at all. And any trade that you win, yes, you won, but your maximum downside was your whole account, or anywhere between 80 to 95% of your account, depending on the leverage that you have within the account and which broker that you use. So any win that you make or that you have is going to be offset greatly by the amount of risk that you're taking, because your risk is somewhat infinite, or somewhat capped at the size of the account that you're currently trading. So using things like a stop loss, using correct leverages and risk management strategies, depending on where your account is, can eliminate this from happening when you to be able to see you had a bad win versus a good win. And then emotionally driven trades. Trades that are entered based on fear, greed, or revenge rather than logical reasoning. So if you have the fear of missing out, FOMO, that's an emotionally driven trade that you're taking that isn't based on what's actually happening in front of you. It's more about what you think is going to happen, or what is happening, what you fear happening that you miss out on partaking in. Greed, things like, let's say you have a trade and you have your risk reward set at a 1 to 3 and your TP's at a 1 to 3 risk reward. Let's say it reaches a 1 to 3 and you don't take the trade off, and you're looking for it to go to a 1 to 6 just because maybe, let's say, you want to buy a pair of shoes where the profit needed from that single trade would warrant a 1 to 6 risk reward for you to be able to get whatever you want outside of trading. So it's kind of bringing outside expectations and outside desires into the market, trying to enforce that and trying to impose that on the market. So in overall, good wins, they help build a more consistent trading approach that you're not doing so much seesawing between profitable and unprofitable. Whereas if you're having many bad wins, they can somewhat erode your trading discipline, making it harder to identify and stick to strategies that work long term. So maybe for a week, month, 6 months, you can trade a certain type of way, but once you look at it from a longer time horizon, having certain things that happen consistently, like deviating from your system, having luck driven trades, poor risk management, and emotionally driven trades, all of these things have a higher probability to not work in your favor. So time is always going to beat you. Volume of trades is always going to beat you when you have most of your wins coming from bad habits. But yeah, those are like the characteristics, the overall base level of good wins and bad wins. Let's move on to some examples. So some examples of good wins, I have it here just kind of outlined with just two examples of two trades that I've taken recently. Like the system, like it's a type C entry. I've explained what a type C entry is. It's basically is disrespect of an imbalance to the opposite side, or enter possibly off of the break or the retest of that broken imbalance, and then continue in the opposite direction. It's usually it is always based off of divergences between ES and NQ. I'm not going to get too heavy into it because you guys know by now what type of setup that is. And then I have the analysis. Analysis doesn't need to be super complicated. It can be very time frame oriented. It can be fundamentally oriented based off of, say, earnings that come out from our options traders, and things like that, and even crypto traders. And then risk management, or let me stick to analysis for a little bit longer. Time frame correlation. If the market's moving upwards on the daily hour, or the daily time frame, 4-hour time frame, and 1-hour time frame, that's 100% congruency between time frames and 100% correlation. Why would I be looking to sell? There's no reason for me to be looking to sell. I would be trying to like literally catch the top of a move, which is not something that I'm looking to do. I'm trying to be on the side of higher probability here. So what I'm going to be looking for in an instance like that is a continuation move. So that already puts me in the mindset to be looking to possibly go long in the market. If an opportunity that follows my system presents itself, I'll be willing to take the risk. And then with your risk management, with that risk that I do take, at this stage in my trading account, I'm risking 1% of my full account size. So if I have a $100 account, I'm risking $1 on that trade. And then I'm targeting a 2R. The reason I do that is because I used to have an issue with greed where I would want the trade to run to a 1 to 8, 1 to 9, 1 to 10, 1 to 20 trade. I've had trades like that before, but they don't happen as often. And the likelihood of them happening more than once every 2 months or every 3 months is very low. So I'm trying to have smaller base hits. So 2R trades. And that, for one, increases my win rate, which also helps my psychology. And then two, it gives me an opportunity to have good risk management. So that if I do lose a few trades in a row, I'm not sitting there sweating that I'm going to lose my account or my account's going to get blown. So that's, example number one. Example number two is, like a type B entry. It's even a little bit simpler, where the price was already moving up on the 1-hour time frame. We just had a few imbalances, and I identified those, and I said, okay, if I'm going to be getting into a trade today and I'm looking to go long, these are some of the areas of interest that I would have, and I would like to see price come back and rebalance into, and then possibly get an entry out of that price range to go long. So that was the analysis. The system was a type B setup where, a low is taken and then structures formed, and a break of structure takes place on that lower time frame, whether that's the 15, 5, or 1 minute time frame, with an imbalance on that same time frame. And I wait for price to rebalance on that smaller time frame, take the entry off of a bullish or bearish confirmation candle targeting a 1 to 2R. So, or 1 to 2 risk reward. And then the same thing for risk management, 1% of the full account size targeting a 2R, 2 times the amount, the dollar amount of a potential loss. So this kind of ensures that anytime that I'm looking to take a risk, I'm going to be making double what I'm willing to risk, and that makes it worth it for me, and that makes it a good reason for me to even be wanting to get in the trade. But now let's look at some bad examples. or some examples of bad wins. Um, so first off, I have the system up there, and the parts that are in red are somewhat the areas that can possibly make it a bad trade in somebody's eyes. It makes it a bad win in my eyes. But to some people they don't care, some people they don't mind. But for me, I try to be as consistent as possible, and I want my system to be as sustainable as possible. So things like this, I don't want to happen. I don't want to happen as often. But yeah, so for the first trade, it's a type B entry. Cool, that's fine. On the 1 minute time frame, it looks smooth. It's whatever. On the analysis side, if I had a picture, on the 1 hour time frame, we had broken structures to the downside, and we were retesting that previous low now as resistance. Now, why would I be wanting to buy right up into the resistance when there isn't much upside overall for the trade to move without breaking significant structure? This made it a low probability trade due to the fact that I'm in a bearish market condition trying to go long right under a prime resistance area to continue then short. As you can see, the trade would have ended up going in my favor, but I entered right around here because the trade was just really just not good for my mental capital. And I don't want to keep doing that to myself. I don't want to take trades like this because it's going to make me more nervous to take trades overall. And I'm going to then miss out on the high probability setups that are a little bit more streamlined. And then two, another type B entry, where this is actually the trade that I took last week that I was speaking to you guys about, where we are in a somewhat of a bearish / ranging market condition on the 1 hour time frame, whereas we're trending up on the 4 hour time frame, but then we're down trending on the 1 hour time frame. So it creates indecision, which then results in low probability, regardless of whether you're selling or buying. Whereas say like you have time frame correlation, let's say those odds are at a 60-40, 70-30, 80-20, when you're in a ranging market condition, that evens out very much to a 50-50. And you don't want to just be gambling and having a 50-50 chance at success when you could possibly wait and have more control in the future. Whereas this trade, yeah, it looks nice once I reach good profit. But I take the trade here, type B entry, and price literally almost stops me out. Mainly because price is still trying to flip. Price hadn't flipped on the 1 minute time frame fully to going long. Therefore, the higher time frames hadn't flipped. So I'm still bearish, looking to go bullish, and I just so happen to catch a falling knife. That's what I have here. Whenever I'm trying to catch a falling knife or trying to catch the top of a move, that is gonna automatically be characterized as a bad win if I do win. And then risk management was the same for the second as for this trade here. It was pretty good risk management. It just wasn't a very good entry nor a very good trade to take as far as sustainability. But for the first one, going back to the risk management, I exited early. As you can see here, the win I won maybe I made maybe $70, but I was risking damn near maybe like $500 on the trade. Anywhere between $400 and $500 on the trade. So that risk reward is not worth it. If somebody tells you, oh, you have to risk $400 to possibly make 70, you're gonna be like, hell no, that's not worth it. Because then if I lose, my reasoning for getting in is to make more than what I could lose. And that's what you want to do as a trader. You don't want to have terrible upside or low upside and large downside in any trade that you take. So those are just some examples of what a bad win may look like. Like I said, it's subjective to everybody, but for me, this is what it looks like for anybody that's in the group. And I ask them questions on the trade that they took, and they have any of these discrepancies as to things that differ from a good trading plan or a good execution. I'm going to call it a bad win. And then here, this is like the goal of all this is to see ways that we can increase good wins, which will decrease bad wins, and then increase our win rate. And no matter what, increasing your win rate is always going to help your P&L, in my opinion. If you have at least a 1-to-1, 1-to-2 risk reward set per trade before taking it. So first point, developing and sticking to a proven system. So what that looks like is a lot of people, when they start trading, they go on YouTube and they find different trading strategies, quote unquote, and they bounce around from strategy to strategy every few weeks, every few months, or even every year. And they don't really give it time to mature in their minds. They don't give it time to they don't take the strategy and they don't try to make tweaks to it based upon their experiences with it. They just look at it like, okay, if it's given to me on day one and I use it like how it's given to me on day one and it doesn't work for me, I'm just gonna totally discard it and try to forget about it. Where in that case, I don't think that's very smart, but I used to do it. I think that's something that you shouldn't do, mainly just because the way that we learn is through adaptation and it's through improving. And so learning how to back test, which is looking at previous days in the market, previous times in the market, and then looking at certain patterns, certain things that may happen on a continuous basis or on a consistent basis that you can take now in the future. And then somewhat of the if you follow your plan, the what you call it, the probability of success when you're taking that trade. And then forward testing, taking live trades, journaling them, and things like that. Just to be able to see, okay, how often am I winning with this setup? How often am I losing with this setup? Is this a good win? Is this a bad win? If I can go back to January and see, okay, I don't like how I won. I won this trade, yes, and I made money, but I don't like the fashion and the way that I did so. So yeah, documenting your trading plan, writing it down makes it real hard for you to forget about it. So if you just put it in your head, oh, I'm going to do this, I'm going to do that, I'm going to do this, I'm going to do that, and then you don't do it, you really don't have anything to hold you accountable. Whereas if you write down, okay, this is what I do when price is this. This is what I do when price is this. This is what I do when price is this. And then once I'm in the trade, this is how I'm going to manage it. Once you do that, it becomes a lot easier for you to have some level of consistency to track your progress using that system and using that way of thinking in the market. And, second point, prioritizing risk management. I think learning how to lose is more important than learning how to win. Learning how to lose less is more important than learning how to win more. So setting like a percentage or a dollar risk per trade or per day. Some people use a maximum risk per day. Some people use a maximum risk per trade. I use a maximum risk per trade because that keeps me in check. Now, I'm not going to take anything any more than 2 maximum. When I say maximum, I don't even do this. I haven't done this for months. 3 setups in a day. But I know, okay, max, I could lose 2% in a day. And usually the past few weeks, I haven't been taking more than 1 trade per day if I am to take a trade at all. Like last week, I took 1 trade. The week before that, I took like 2-3 trades. So over the past like month, I've literally taken like 4 trades. And tomorrow's the 20th. So I'm taking like really 1 trade every 5 days, it seems like. So, and then, having a minimum or utilizing stop losses. Yes, we spoke about that earlier. And then having a minimum risk reward ratio. So there are some people, even some people in the group that have somewhat of a negative risk reward. Or they average one where they're say you're risking $100 to make 70. That's a 0.7 risk reward. And I would say that can work in the short term, but like we said, over a longer time horizon, the likelihood of that working is very slim. We as people in general, we are not going to be right most of the time. Like if you look at the greatest shooter of all time, Stephen Curry, he probably has made anywhere between 35, maybe 37 or 38% of his 3-pointers of all time. It's just he's putting up a lot of shots and he's still able to keep that high clip rate. So it's important to have better odds than to have a better win rate, or not have better odds. It's better to have a better reward than a better win rate or a better strike rate. If you look at some of the best baseball batters of all time, like Babe Ruth, and things like that, they probably batted at anywhere between 2 and 400, if that. Like I don't even know, but probably around 2 and 400, and they're regarded as literally the best players of all time. So it's extremely important, in my opinion, to when you do have a winning trade, it's at least worth 1 or more of your losing trades. You don't want to have wins that are less than 1 full loss, because then you have to win more than you lose in order to be profitable or even to just be break even. Third point, learning and adapting continuously. So this kind of goes back into me like saying, the importance of journaling and analyzing past trades. If you don't journal, you're kind of like a chicken running with its head cut off, because the human memory can be very feeble. We don't usually remember the things that we'll remember for a while, but we don't usually remember the things that would help us improve from the previous mistakes that we've made. Being able to see on a weekly basis, on a daily basis, okay, what did I do that day? What did I do a week ago? What did I do a month ago? What did I do a year ago? What can I learn from that and bring that into the present so that I don't make that same mistake again? And learning how to cut out certain mistakes is really what makes you profitable, not learning how to take more trades. Now, taking more trades doesn't make you profitable. Losing less trades and making less of the same mistake over and over again is what makes you profitable. And then learning from others. Like I did say earlier, that like sticking with a system is important, not just bouncing from system to system, because that can, like I said, breed unsustainability. Yes, all of that is true, but being open-minded to learn from other people, whether that's on YouTube, whether that's through a course, whether that's through your peers, different ways to look at the market, and then possibly incorporate them into the system that you currently use to see if you can improve. And then developing emotional discipline. This is probably the biggest one for me. Curating my environment, and curating my environment in a way that it is conducive for a successful day in the market and a successful day in general. We can't control the world, but we can control where we place ourselves many of the time. And it is in our best interest to be mindful and to be aware of the choices that we make and the places that we choose to be. Now, if you're in an environment that's high emotion, high stress, you're going to most likely take a rushed position or a position that you would normally take trying to feel better about yourself or about your environment, right? But no, curating your environment before you get to the charts helps breed emotional discipline, helps breed emotional ability or emotional stability, so that when you're looking to possibly take a position, it's based off of rationale and not greed or fear or revenge trading. And then setting realistic goals. Now, whenever we usually start trading, we say to ourselves, "Oh, I'm going to make $1 million in the next 3 months." And I learned this one strategy off YouTube that literally says 50,000 or 500,000 views, and I think I'm the one that's going to take it to the moon and follow it exactly how it was said in the 15-minute video, and I'm now a market maker, and now I'm gonna be the most successful trader ever. That will hurt your emotional state whenever you don't reach that. Whenever you set that level of expectation or that level of goal for yourself without really knowing what you're getting into and what it takes to get there, is gonna really just mess you up emotionally, because you'll feel like a failure, you'll feel like you're not doing enough, and things like that. So lastly, trading in favorable market conditions. I'll say, one thing about trading is also more of like, knowing when not to trade, knowing when not to get in the market, knowing when not to be looking to enter anything, can be more important than trying to look for every single position that's right for you to get in, and things like that. So, good wins are usually taken during sessions with high liquidity and high volatility, whereas bad wins, they are more taking in a ranging market in low liquidity and volatility market conditions, that aren't sustainable, that aren't as streamlined as of like a execution process as, like, let's say, a market with high liquidity and volatility and volume. So yeah, let me just go back. Go back to, like, some of these here. I think that this is probably one of my favorite presentations I've done for the group so far. I think that it is important for us to just keep in mind that just because we win doesn't mean that it's a good win, and not every and even if we win, it can be a bad win. It can be even because we'll win and we don't learn anything because we think that it was just a good trade to take. When in reality, if you had lost, you would have possibly seen the error in your way of taking that trade and how you managed it. So I don't think anybody is watching right now, but yeah, if you guys have any questions as far as the people in the Discord, please feel free to hit me up whenever on here. I'm gonna probably send a few screenshots of this in the chat, and then for the people that are watching this on YouTube, like I said, please like, comment, and subscribe. I hope that you gained value from this. I know that I did, speaking to you guys about it. Thank you guys for watching. I'll see you guys soon. Have a good night. Peace.